Hi, everybody. I just wanted to share with you this. It's a simple strategy. Sometimes trading can be made so complicated, but it is quite simple if you understand very some few concepts. And I'm just going to show you a way of looking at what price does, and then taking trades, profitable trades based on that. Now, a simple concept in forex trading and most trading is that when a candle closes, and now each candle is also known as a period. When a period closes, for instance, what we have now is this current period here. It is not yet closed. That candle is not yet closed. It's still happening. So, in fact, it's just started because this is the hourly H1 time frame. So, this candle is just 4 minutes into the hour. So it still has another 56 minutes to complete. So that this candle, even though it is here right now, might actually go down after some time. But right now we're seeing it go up. That's what we're seeing now. But just take a look at where that candle opened. So it opened here. The prior candle, the prior period closed almost at where it opened, right? Now, when this particular one, which was an hour ago, opened, it opened there. And the prior candle closed there. That was a bearish candle. So a candle that is colored red, but it's bearish candle. You can see it also closed where the new one opened. Now, where that one opened, it opened around the same place that the other one closed. So that's a concept in trading, that a new candle, a new period always starts, the open price of a new period always starts where the prior candle or the prior period closes. Now, sometimes that's not the case. And when that happens, is an abnormality in the market that then provides us an opportunity to make money, and usually make it in a very short space of time, as it were. So when price goes out of normal, that abnormal behavior usually provides some trading opportunities that are usually typically very profitable. And I'm just going to show you this. Now, when that happens, where you have price actually open a new period, a new candle open somewhere that is significantly different from the prior close, that's why it's called a gap. And I'm just going to try and find gaps. It's easier for me to find it on a daily time frame. So I'm going to try and find gaps where a situation like that has happened. Now, clearly we can see that this is the current day. So we're now on the daily candle. So this is the current day candle. So it's not closed yet. Yesterday was this. So you can see where this one closed is typically where the next one opened. And the prior day to that, this one opened here, closed down, but the prior day closed up there, and it opened typically around the same place. But now watch the one before that. That day, the candle closed there, but then the next day it opened. See where it opened. So it is significantly different. Significantly different. So that presents an opportunity. Let's see another place where that happened. Can you see that closed there? The next one opened down there. So significantly, yeah, different. When that happened here, it was about the same price, about the same price, about the same price. But here, significantly different. Here too, yeah, about. Here too, about. Here too, about. Yeah. So you can see sometimes when that happens, and that what I'm saying is that presents us an opportunity for some profit. And I'm just going to quickly show you how you can profit from this and whether this is really true. Now, the concept behind the way I trade the gaps is that when price significantly opens somewhere different from where the prior period closed, price tends to move back to correct that abnormally. So if in this case here, the new candle opened there, price had to move back to try to correct this abnormally, and then it carried going on, continued going up, right? But it first had to move back. Now, that first movement to go back to close some of that gap is what presents us an opportunity. So, in this case, when we had this gap up, we had an opportunity to sell this movement down and then make money on the move down. In this case, let's see a case where there's a clear gap down. So even here too, it closed there. it opened here, so it gapped down. Now price also moved up to correct that gap before it then continued going down. Sometimes it's more significant than that. So if I go to someone, one of my um, favorite pairs for this is GBP NZD. Now, this was on Sunday night. So, Sunday night, beginning of the trading week, and price opened there. Friday closed down there. And see where Sunday opened. Can you see that's a massive gap? Now, you can see all this move here was the opportunity, even though price. Then the next day, yesterday, and then today, price is moving up. But this move here presents us an opportunity. Now, someone looks at that and says, "Ah, that's not a lot." But if you look at where that opened, and where the prior day closed. That is a 55 pip or so movement. Now, if you know what 55 pips can do, you will not call 55 pips a small amount of movement, because I have seen people. I've seen someone actually take $1,275 and turn it to a million, over a million in 3 days, and he did it with 53 pips. So 55 pips is quite significant in the scheme of things. So you can see that was an opportunity, a 55 pip opportunity that could have easily, or even more than that, it was 60, 61 that could have been made. This was this gap down, so this move up here was about 22, and that's insane. That you can make some nice profit from that. That one as well. How many? About 22. But then I have what I call an indicator, a gap indicator that allows me to see this quite easily. So I've got an indicator here. You can see the one from Sunday. You can clearly see that was a gap down, a gap up, and then price had to. So that gap up was from there actually, and price had to then move all the way down. Can you see that's huge? I actually calculated that wrong. That's about 119 pips, but that's where price opened. When I was looking at that, um, price opened up there. It didn't open here. Price opened up there. So that was huge, 120 pips. So that is insane. Um, so you can see that, and this indicator makes it easy for me to see. In fact, today or from yesterday night, we had a 20 pip gap with GBP card. So if I find GBP card and let's see, so you can see that last night when this opened, we had a gap down, and that was a buy opportunity. And you can see from then till now, price has moved about 70 pips. So that would have been an easy trade for one to have taken. Now I'm going to simulate this actually and show you with my 5TT gap auto system. Is an EA, and I'm going to go with GBP and ZD. I like that pair, and I'm going to start from 1st of January 2018, and I'm going to get to the end of today. So today is the Wednesday, 14th of September 2022. So I'm going to simulate this, and what it's going to do is it's going to just run. I'm going to use the current spread. I'm going to use, okay, now this is because of me, you can use 1% of your account per trade, but I'm going to use 5% of the account per trade, and I'm just going to leave all the other settings the way they are, and I'm just going to go start, and then we can just continue. I can continue showing you examples of these in the market, and let that just keep running in the background, and it will soon be almost be done shortly. So that was a $10,000 starting balance, and let's see how much we'll make in that time period. I'm just risking 5% of the account per trade, and let's see how that goes on just one currency pair. Okay, so let's look at those examples again. Um, yeah, so all across the market, you can see this. That's really nice. That one again, gap down, buy around here, price moved up, nice. Gap down, buy around here, price moved up, gap down, price moved up, gap down. So you can see every even gap up, sell, and then price move. You can see it happening everywhere in history. You can go back as far back as one. In fact, I'm running the simulation from 2018, so we'll see what that looks like. So this is not, we're not talking about here um, a concept that only works for a time and then disappears. Now look at this as well. This was 2013, right? This was August, 2nd of August 2013. That is almost 10 years ago, 9 years ago, um, as it were. So this was the close of that candle and then opened up here, right? When it opened up here, can you see price eventually came and closed this entire gap? On that particular day, it moved 144 pips. That's insane. And then if you look at how much it then went to have to cover the gap, that's 250 pips. 250 pips. What a nice gap. Now, this is from 9 years ago. So this is happening even till today. I just showed you one that happened even today with GBP CAD. So it's a strategy you can use. This one as well. Gap up here. You want to sell, and it did come down. That was 58 pips. Yeah, it's accurate. That was in 2014. And I'm not looking at it properly. The indicator is not. In fact, let me see if I can get the indicator to get me more up to this. So I'm looking back to 2000. Let me go 5,000 candles. I'll see if I get to this point here. Okay, I do. So you can see. So I can get back to 2014 to see what price had done. So you can see gap up, close, gap down, up, up, gap down, up, up, down. This is when 2014. You can see it happening. Wow, wow, wow. You can see it happening. Boom, close. This one as well, close the gap. This is now 2014 still. Yeah. And so this is a simple concept that just, can you imagine doing this yourself? Let's just take a look at what's happening with this. So we can see now, oh, so the trade is going up. So so we take a look now. So these are some of the profits. So it's at 17,000. So it's already done 72%. Or so over 72%, 72% of the account, and that was by the same 2018. So he like double the account by 2018. So once you lost here, there was a loss here, minus 105. And by here it was already 100% by about a year. With one currency pair, folks. So 105, right? And so it's still carrying on. It's still at 2019. Still carrying on doing it. Just a simulation, right? So let's just take an example from one of those results and go and look at it. So this was when it closed it on the 3rd of the 6th. So that was trade number 141. It opened it on the 3rd of the 6th by 0000, right? And it closed it. This is on the daily time frame, and it closed it around 6:27 in the morning, right? So that's 3rd of June 2019. So let's find 3rd of June 2019 on our chart and see whether that picked it up nicely. 3rd of June 2019. We're still in 2016. This is going to take a bit of time going now. 17 now. Let's get to 18. 3rd of June 2019. So we're in 2018 now. 3rd of June. So we're in 2019. 3rd of June. So where's 3rd of June? That's it there. So that's that candle there. Can you see there? 3rd of June 2019. So that was a gap up. You can see gap up. It says gap up there. And the gap was a 16 pip gap, right? And that was 3rd of June that we're looking at. This is it here. So it opened it at that time and it closed the trade by the end of that day, right? So you can see they closed it by the end of that day, right? Yeah, same day. Or is it? Oh, oh yeah, closed it by the end of that day. Or I can see here now, it actually opened it 1.77 and partial closed the trade by that point there. So it took half of the trade off, which is what I tend to do as well. So you can see it did that, and then it finally closed the entire trade. I believe around yeah, yeah, yes. So on the third, yes. So it closed partial profit there. So you can see it was a sell and price completed. So let's do another random check. Boom. So now it's at 29,000. So it's at 29,000 now. Let's take this one here. This was on in 2020. So it has already what tripled the account. Not bad, not bad. Um, so it's tripled the account here, and this was on the 3rd of September 2020. It's about 2 years ago, right? So 3rd of September 2020 is this one here. So can you see that? So it was meant to be what? So let's see, where did it start? It was 263. So 263 is this year. So it bought 3rd of September 2020. In fact, it actually started it here now. So that's when it opened it, right? 3rd of September by 0000. So 12 with that, immediately the candle opened, it noticed the gap, took the shot. So 3rd of September, this was it here. This was the trade. So he bought because it was a gap down, so he had to buy to follow that move up, and then the day finished up. So he made that profit. So first of all, closed partial profit. So it was a 1.62 trade, closed 50% of it with this profit here, and then finished off the last one. So he continued trailing the stop loss. That's why you were seeing all this modify. It was shifting the trailing the stop loss, and then finished off $510 for the final 0.81, and just continued. So where are we now in the simulation? So simulation is carrying on. It's already times 4 of the account at 42,000. This is 2022, 2021 now. Let's take another example. Should we take that one? So where did it start from? That was 5th of August 2021, 0000. 5th of August 2021, 5th of August 2021, where is it? 5th of August, and it was a buy as well. So it was a gap down, so we had to buy. So again, you can see it opened it with a 2.24 trade lot, 2.24 lot, then closed half of it at 156, and then trailed the stop loss on the second one until it got taken out. And so the stop loss was hit at 302. So that trade was a 456, $458 profit. That's not bad for a day. Then the next day there was another one, so you can see clearly there was another gap down again, and he took the shot. And that one, the first one, so he opened it with a 4.6 lot. Again, calculating risk management, a 4.6 lot. He opened it, he closed half of it with 326, and then the second half was stop loss was then hit on the second half as it trailed to 613. So you can now see there about $930 from that one currency pair. It's not a bad deal. Actually, it's not a bad deal. And it's just continued on. So this is 2018, 2019, 2020, 2021. Come on, folks. It's not playing here. It's not based on anybody's gimmick. No, this is price action. It's simple. Don't make this thing complicated. It's simple. And now we are at where 2022. Oh, 12th of September 2022, and that's the end of it, as it were. So, what was the graph like? Can you see what the that's it? We had a loss here. It was a major loss here, I'm sure. Boom. But then you can see the curve. The curve is just smooth, as it were. And that's what it looks like here. So when you look at it here, it says the initial deposit was 10,000. There was net profit of 66,000. So come on, folks. If you had $10,000 in an account and it was the 66,000 trading just one currency pair, typically once or twice a week, something like that, and you're able to turn your 10,000 to 66,000. Come on, even if you had that kind of money in in a bank account somewhere, you can have this kind of return. And with the gap system, the way I trade it now, see the maximal drawdown on this account was 7.88%. So at any point, the maximum drawdown on it was 7.88%. That's impressive. Come on, very very impressive. The profit trades 99%, 99.6% of all trades taken. So there were two losses out of 523 trades. So 521 were profitable and two were losses. Again, um, this is what's called high probability setup. I teach you all these things in the 5 to 2 Profit Club. But you can see whether you're trading it manually by just finding it yourself or using the help of the indicator to help you spot those things when they happen immediately, or you're using the automated system that we have. You can see this is just clearly very impressive. The average consecutive wins 174 wins against one loss. Consecutive profit counts of wins 292. Count of win 50,952. Where most takes against 1,806. So that's quite impressive. So the reality is this: there are three things you can do here. So there's a link you can click to go and watch some training I did on. So it's a four-part video series and also an ebook of this strategy. I give it to you for free, no problem. So you can learn it, you can start to use it, you can start to earn money from the market doing it, as well as you then get the opportunity to also see the indicator and the auto system if you want to get those. Our VIP clients get these for free. They don't have to pay anything for it. So if you want to talk about that, you can reach out to us to talk about our VIP program. But as well, you can also be a member of our club. All the details to these will be with this video. So let me know if you have any questions. Always ready to answer your questions and to support you. All right. I look forward to seeing you next time. But you just take care. Cheers.